Roth conversions are taxable. So at the same time that you're strategizing how much Roth conversion should I do, you also need to determine how are you going to plan for the taxes. If you don't withhold the right amount or pay in the right amount, you're going to create a tax surprise, maybe a cash flow crisis, or worse, a tax penalty. How much should you withhold when you're doing a Roth conversion? I've got that answer and more coming up. Are you doing a Roth conversion this year? You have to have an answer to this question, and it changes from year to year. I'm not going to say it changes month to month, but every time you have a big change in your income, or there's a change in maybe your withdrawals from retirement or something like that, you've got to answer this question. It's dynamic. It changes frequently. Should you be doing a Roth conversion? You got to look at all 6 areas of your financial life, but definitely tax planning, which is different than tax preparation. Tax planning is proactively looking at your tax picture to say, are there any opportunities for you to pay the least amount of tax over your lifetime? Because a Roth conversion is going to mean you're going to pay more taxes this year, right? You're going to voluntarily say, yeah, these dollars I could keep in my IRA and just continue to kick the can down the road, and whenever I withdraw them, I'll pay taxes then. Or you can say, you know what? There's an opportunity. I'm in a low tax bracket this year, or I've got a new deduction this year. Let me invite some of that income into this year and then move it over from my IRA to my Roth IRA such that those dollars never are taxed again. That is you voluntarily paying more taxes this year so that you avoid them out there in the future, paying the least amount of tax over your lifetime. Got a great question from fan of the show, Helen, about the Roth conversion. To pay taxes on a Roth conversion, could I calculate based on the taxes I paid last year at 110% now in cash? Okay, in just a few words, there's a lot going on there, and I think I'm understanding what she's saying. And the first one is she's aware of my principle that on a Roth conversion, yes, it's taxable, unless you're doing the backdoor Roth, and that's a different video, okay? But a Roth conversion is taxable. I don't want you to withhold taxes. I want you to cover the taxes a different way. Why? Because when you're doing a Roth conversion, the whole idea is how can I get as much of my wealth growing tax-free as possible? And yes, a Roth conversion is taxable, but if you withhold taxes on it, you got 2 problems. One, say you do a Roth conversion of 25 grand and you withhold 5 grand. Well, now you pay tax on 25, but only 20 shows up in your Roth. Wow, I mean, yeah, that you might need to do that, okay? Withholding taxes on a Roth conversion is an option. I would just put it at the bottom of the list because I'd rather have you do a Roth conversion of 25 grand and have 25 grand show up in your Roth IRA so it can grow tax-free. So one problem is the name of the game is to get as much of your wealth growing tax-free, and when you withhold on a Roth conversion, you sort of violate that principle. But the second is if you're not yet age 59 and a half, a withholding on a Roth conversion is treated as an early withdrawal. And therefore, not only is it taxed, but that withholding is penalized as well. Seems punitive, seems confusing, seems like, no, it shouldn't work that way. It does. So therefore, if you can come up with cash, or if you have got a refund that you know about, using those dollars to cover the taxes on the Roth conversion, far better. So that's the first point that she makes, now in cash. Yeah, I love that. Don't withhold on a Roth conversion if you don't have to cover it with other means. But then the second is, well, how much should I pay in? And she referenced 110% of last year's taxes. Now, how do you avoid a tax penalty, an underpayment penalty? There's different penalties from the IRS, but specifically, how do you avoid an underpayment penalty? Well, take a look here. To avoid an underpayment penalty, this is paying in by estimates or having the right amount of withholdings. We've talked a lot about that, but you've got to pay in enough so that when you file your tax return, you're going to owe less than $1,000. This is federal. You might have a different underpayment penalty issue with the state, but this is at the federal level. You got to owe less than $1,000 or be getting a refund. Okay, fantastic. That's clear and easy. But if you're doing a Roth conversion, that means there's going to be more taxable income. How much do I need to withhold? I might owe more than $1,000, then what do I do? Well, you've got to pay in at least 90% of the tax shown on the return. But what if you don't know what the tax is going to be? Then you just simplify it and say, we got to pay in at least 100% of what your tax was last year. Not what you paid in last year, not your withholdings last year, what your actual tax was last year. You got to pay in at least the same amount as that. But If your income is over 75 grand single or 150 married filing jointly, nah, it's not 100. You got to pay in 110%. You've got to, so if you're not exactly sure, well, there's a lot of moving pieces. I really don't know what my tax is going to be on this year, even if you do a great projection, more on that in a second. Let me be safe. I want to avoid a penalty. I'll just pay in 110% of last year. So going back to Helen's question, yeah, that is one way to do it. If you're doing a Roth conversion for this year, I would first recommend that you build out a tax projection. This is really, really nerdy. We love it. I love doing it. But you essentially forecast all of your income for this year. Even though I'm recording this in late June, you're forecasting for the entire year. And yes, we still have 6 months. A lot can still change, but you're forecasting what is my income going to look like for the entire year? How much interest, dividends, capital gains, IRA withdrawals, all that sort of stuff. All of that added up, what are my deductions going to be? Will I itemize, standard deduction, that sort of thing? Will I have any of the newer deduction, no tax on tips, no tax on overtime, senior deduction, that sort of thing? All of that, calculate, all right, what tax bracket am I in? And then what's the tax? What have I had withheld? And all of that. Well, then if the opportunity shows up where you say, okay, we're 15 grand below the 22% tax bracket. Let's do a $15,000 Roth conversion to fill up the 12% tax bracket and pay tax at that percent. Then you build that into the tax projection as if you already did it. And you see the result. All right, well, now what's my tax? Now how much have I had paid in, and therefore what am I going to owe? Be prepared. What cash flow outlay am I going to need to be prepared for? And in that situation, you can determine, all right, yep, I will pay in, if it's 3 grand you expect to owe, I'll pay in the 3 grand right now through an estimate because I've got the cash. You're going to want to do so in the calendar quarter that you, or in the tax quarter that you do the Roth conversion, because the IRS wants the tax payment, the estimated payment at the time the income was incurred. Okay, so quarterly estimates, the first quarter is due April 15, second quarter is due June 15. Okay, third quarter is September 15, and then fourth quarter is January 15. So say you do this Roth conversion now, late June, well, we're past that second quarter, we're into the third, so you'd have all the way up until September 15 to pay that estimate. But say you take a look at that tax projection, you say, I just want to get as close to break even as possible. I'll pay in the 3 grand now via an estimate. Great, that's my preferred way of doing it, taking a look and saying, yep, based off a tax projection, I don't want a cash flow, I don't want a tax surprise, I don't want a cash flow crisis, I certainly don't want a penalty. Let me calculate how much that I think my tax bill will be. I'll pay that in, and then you'll double check. All right, well, what I've paid in is that 100% of last year is at 110%. Now, going back to Eileen's proposal, I definitely think it's workable, because if you don't do that full tax projection, where you analyze, all right, here's what I think my tax bill is going to be, and I want to get to break even. Or if you look and you say, I don't want to pay in all of it right now. I want to pay in as little as possible right now. And I want to keep the rest of the dollars that, yes, I'm going to owe Uncle Sam. I'm going to keep them in my pocket and earn the 3.5% or whatever my money market's paying. And then I'll pay it when I file my taxes. Well, then you just need to make sure that you pay in 110% of last year. Okay. That would only apply if your adjusted gross income's over 75 grand or over 150 grand. And if you believe, yeah, because of this Roth conversion, I'm going to have more tax and more taxable income this year. Therefore, I'll pay in the minimum. They call it a safe harbor, which is 110% of last year. I'll keep the rest of it. I'd still want to have awareness. Yeah, I think I'm going to owe 10 grand when I file my taxes. Keep that 10 grand in money market, earning some interest, but then you don't have a cash flow surprise or crisis when you do your taxes. Okay, so my preferred way, do a tax projection, have visibility, clarity, be aware of those safe harbor rules. Without that, yeah, at least pay in that 100% or 110% based on your situation so that you avoid the penalty. The bigger question, should you be doing a Roth conversion? But if you answer yes, the question behind the question is, well, how are you going to cover the taxes? That's something most people miss. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.